Hey everybody, Smart Silver Stacker here. In a recent interview in Hong Kong, Saudi Arabia's Minister of Industry and Mineral Resources stated that the Saudis are now open to new ideas in regard to their relationship with China, including settling crude oil transactions in the Chinese currency, the yuan. Now, this isn't the first time that China has pushed for a yuan-based oil trade, but the talks are gaining momentum, especially as China becomes a bigger player in Saudi Arabia's economy. And this is where things get interesting. China's efforts to establish the yuan as a global currency have been going on for years. They've even created the Shanghai International Energy Exchange, where oil is priced in yuan. But the roadblock has always been that other countries, like Saudi Arabia, prefer to stick with the dollar due to its stability and liquidity. But now, Saudi Arabia's willingness to entertain the idea of pricing oil in yuan suggests something is shifting. Why now? Well, for one, China's influence in Saudi Arabia is growing. The two nations are forging new ties that go beyond just oil. Saudi Arabia's Vision 2030, which aims to diversify its economy, is leaning heavily on Chinese investments in everything from infrastructure to technology. This deeper relationship could eventually lead to more yuan-denominated oil trades, and that would have serious implications for the US dollar's status as the world reserve currency, as well as for gold and silver. Did you know SD Bullion is giving away a monster box of 2024 Tree of Life silver coins? Sign up today at sdbullion.com/sweepstakes. So what happens if Saudi Arabia does start accepting yuan for oil? Well, the US dollar could lose one of its biggest advantages, its status as the world's primary currency for trade. And when demand for the dollar drops, it can only mean one thing: inflation. Let me put it this way. When less global trade is conducted in dollars, there's less demand for those dollars. And what happens when there is less demand for something? Its value goes down. This could lead to a scenario where the US dollar weakens significantly on the global stage, and that would have massive inflationary consequences here at home. One economist at Credit Suisse, Zoltan Pasar, has argued that we are witnessing the birth of a new world monetary order, where currencies like the yuan are backed by commodities like oil. This is something to keep an eye on because it could mean that the US dollar loses major purchasing power, particularly if more countries start following Saudi Arabia's lead. So, where do gold and silver come into play here? Well, history tells us that when fiat currencies lose value, hard assets like gold and silver become incredibly valuable. The reason is simple. Unlike paper currencies, gold and silver can't be printed at will. Their supply is limited, which means their appeal tends to increase when currencies falter. If the dollar weakens, we could see a flight to safety as investors look for ways to preserve their wealth. And gold and silver are two of the best ways to do just that. In fact, during previous periods of high inflation and currency devaluation, gold and silver prices have skyrocketed. Remember the 1970s? Inflation was out of control and gold prices went from $35 an ounce to over $800 by the end of the decade. Now, I'm not saying that we'll see those exact same returns again, but if the US currency does take a hit, precious metals could easily see significant gains, particularly when priced in dollars. Now, let's talk about this idea of a Petro Yuan for a minute. Some people think that China's push to price oil in yuan could be the start of a new global currency system. Think about it. China is the world's biggest importer of oil, and Saudi Arabia is one of the largest exporters. If these two start doing more business in yuan, other countries might follow suit. There are still some hurdles, though. One major issue is that the yuan isn't as widely used or trusted as the US dollar. For one, China's capital controls make it hard for other countries to fully embrace the yuan. And even if Saudi Arabia starts accepting yuan for oil, they'll still need to convert some of that yuan back into dollars or other currencies for other global transactions. Or maybe they'll decide to simply convert it into gold. The point here, though, is that China is playing the long game. By establishing the yuan in the oil trade, China is positioning itself to challenge the US dollar's dominance. This could be a slow process, but the implications for gold and silver are clear. As the global monetary system shifts, the value of hard assets will only increase. Of course, we can't talk about de-dollarization without mentioning sanctions. One reason countries like China and Russia are eager to move away from the dollar is because the US has weaponized its currency through sanctions. For instance, Russia has been heavily sanctioned following its invasion of Ukraine, and those sanctions have frozen a large portion of its foreign currency reserves, most of which were in dollars. As a result, bilateral trade between Russia and China has already largely been de-dollarized, and China is already paying for imports of Russian oil and gas with the yuan. With this in mind, if you're a country like China looking at Russia, you're probably thinking, do we really want to keep all our eggs in the US dollar basket? This is why both Russia and China have been ramping up their gold reserves. According to the World Gold Council, China was the largest net purchaser of gold worldwide in 2023. Russia is now the fifth largest holder of gold in the world, and China is right behind them in the number 6 position. These nations are clearly preparing for a future where the US dollar is less dominant, and they are hedging their bets with gold. And if central banks are buying gold, well, maybe we should be too. So what should we be doing right now? Well, look, I'm not a financial advisor. I don't give financial advice, but personally, I am using this time to stack more gold and silver. If Saudi Arabia and China's moves really do lead to a weakening of the US dollar, well, gold and silver could be your best hedge against inflation and currency devaluation. And even if you're just getting started buying physical bullion, whether it's silver bars or gold coins, physical, tangible assets can help protect your wealth from the volatility that is coming. And if you ask me, even having a small amount of precious metals on hand is much better than having none at all. As of today, a silver dime costs a little over $2, and you can still pick up a 1 gold-backed note for just about $5. By the way, if you'd like to learn more about goldbacks as an alternative gold-backed currency that is used in 5 states, check out the link down in the description. The point here is that despite the fact that both the gold price and the silver price have risen considerably over the past year, with gold even breaking out to new record all-time highs, you can still get started stacking gold and silver with just a few dollars. And to wrap things up today, Saudi Arabia considering selling oil in yuan is a big deal. It's more than just a trade agreement. It's a sign of the weakening of the petrodollar system, a fundamental underpinning of the dollar status as the world reserve currency, and potentially it could be the beginning of a new global monetary order. As the dollar's role in global trade diminishes, the value of gold and silver, well, they're likely to rise. And if you've been on the fence about stacking gold and silver, now might be the time to get serious. And remember, it's not just about hedging against inflation. It is about protecting your wealth in a world that is changing faster than ever. Thanks for watching, everybody. If you found this video helpful or informative or entertaining, please do me a favor, give it a thumbs up down below, subscribe for more content on gold, silver, and the global economy, and stay safe, everybody. Happy stacking. I will catch you next time. Smart Silver Stacker, out.